All the information is out there and accessible, but it can be nearly impossible to sort through all of the misinformation to determine the right way to do things. Today I'm going to cover the 5 most common reseller tax myths, which you will inevitably run into if you haven't already. Hey, my name is Mark too, and I'm a CPA who specializes in helping online resellers with taxes and with growing their businesses profitably. I talk with reseller business owners almost every day, and I know for a fact that the 5 myths I'm going to cover in this video are alive and well. So let's talk about what they are and how to avoid falling for them. Tax myth number 1, the home office deduction is an audit trigger. I'll sometimes have resellers tell me that they'd prefer to forego taking the home office deduction because they don't want to raise any red flags with the IRS. The good news is that claiming the home office deduction is not an audit trigger. The old timers tell me that there was a time, maybe 30 or more years ago, when the IRS did audit more aggressively in this area, but working from home was much less common in the pre-internet days and there was more gray area. But working from home has become so commonplace today, and much of the gray areas have been clarified with new rules. And even if the IRS did audit based on the home office deduction, so many individuals claim it these days that the chance of being selected for an audit is extremely low. Take advantage of the home office deduction. This is often one of the most significant deductions that a small business owner can take, which can make a huge difference in your taxable income. Tax myth number 2, it's better to make less money to avoid paying more tax. In the United States, we have what's referred to as a marginal income tax system. Here's a picture of the 2020 tax bracket for a single filer. Depending on your income level, you fall within a certain tax bracket. Many people believe that once you pass into the next tax bracket threshold, that all of your income is taxed at that rate. But this isn't the case. For example, if you file as single and are in the 12% tax bracket, you don't have to worry about having an income of more than $40,125. Going over this threshold is not going to mean that the full amount of your income is taxed at the new rate of 22%. The only amount taxed at the new higher rate is going to be the portion that exceeds the $40,125. So if your income is $50,000, the first $10,000 about will be taxed at 10%, the next $30,000 will be taxed at 12%, and the remaining amount of about $10,000 is what will be taxed at the 22%. So don't limit your sales out of fear of paying more tax. You'll still have more cash in your pocket than you would have otherwise. Tax myth number 3, if you make less than $20,000 in sales, you don't have to report your income. This is one that's all over the internet and seller forums. Just because eBayer Steve 999 posted that if you make less than $20,000, you don't have to report your income, and he seems to know what he's talking about, it doesn't mean it's true. Third-party payment processors like Amazon and PayPal are required by the IRS to report transactions for resellers who make over $20,000 in sales and have 200 or more transactions. And that's just the federal requirement. In a handful of states, the threshold is even lower. If you make less than that, it means that no one else will be reporting your activity to the IRS, and it'll be your responsibility to do so. Tax myth number 4, if you sell as a hobby, you don't have to pay tax. Some people sell stuff for fun. Maybe you list old antiques that you occasionally find in your attic. Maybe you're not trying to make a profit and you just like selling things as a hobby. Taxes might be the last thing on your mind. And you may have even heard the myth that any money you earn from hobbies isn't taxable. But if you're making a gross profit from those sales, even if it's just a hobby, you should technically still be reporting those sales to the IRS as taxable income. Your gross profit on hobby sales is indeed taxable. The IRS has a whole list of tests to determine whether or not your activity is a hobby, but it generally boils down to your intent. In general, it's a hobby if you don't have the intent of making a profit. Classifying your activity as a hobby will not protect you from paying taxes. In fact, it's often disadvantageous because of how expenses are treated. Other than cost of goods sold, you can't deduct any related expenses. In contrast, business expenses directly offset business income. They're deductible regardless of whether the business generated a profit or a loss. This often makes owning a business as opposed to engaging in a hobby more beneficial. Tax myth number 5, if you make less than $400, you don't have to pay taxes. And this isn't totally true. When you're self-employed, not only are you subject to income tax, but you're also subject to self-employment tax. And the truth is that if you make less than $400, you're not liable to pay self-employment tax, but those earnings are still subject to regular income tax. So set aside 15% of your profit for self-employment tax. Also remember to set aside money for income tax, including federal, state, and sometimes local. And that rate will depend on what income tax bracket you're in. In conclusion, don't believe everything that you read online or hear from your friends or your brother-in-law or even a misinformed CPA. Reseller tax myths are alive and well, and it's always helpful to get a second opinion. And it's also helpful to educate yourself so you can at least have a sense of when further investigation might be necessary. That's exactly what my Reseller Tax Academy is designed to do, to give you the education and confidence you need to optimize your tax situation. If you have questions, just comment below or come post them in my Accounting for Online Sellers Facebook group. Be sure to subscribe for more videos where I'll talk more in depth on each of these myths and about how to get your taxes and accounting on track in your reselling business. And check out Not Your Dad's CPA on Instagram for more tips and behind the scenes. Check out the links below for more resources to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.